Hi, my name is Greg Olson and I'm the Director of the New York State Office for Aging. Many older New Yorkers are eligible for a variety of federal, state, and local benefits that can put cash in their pockets, help pay for prescriptions, food, and heat, have their taxes reduced, or help pay for care in the community. These are benefits that you have worked for and your tax dollars have supported until a time that you may need them. Unfortunately for many, they are either unaware of these benefits or might be reluctant to apply. Some of the applications for the benefits can be filled out and you can just simply submit them. Others need to be filled out and approved by a local official. Either way, we wanted to make it as easy as possible for you to apply for these benefits by showing you how to fill out certain applications so that you can get them approved easily. So instead of you having to go to somebody to fill them out, we're bringing the experts to you. I would like to thank all of our state partners and local experts for helping us help you understand these applications that sometimes can be difficult to understand or may be complex. Understand how to fill them out and any backup documentation you may need so that you can access these important benefits. Thank you.
Hello, my name is Frank Melia. I'm a Vice President of Lending at Quantic Bank. We are a federal chartered bank based in New York City. And today's discussion will be regarding home equity conversion mortgages. How safe is the process to apply, and how safe is the loan program? A reverse mortgage is used throughout the state of New York to basically stay in the community that they've raised their kids, that they feel comfortable in, and not have to move as we age in New York. So a home equity conversion mortgage, also known as a reverse mortgage, is available to New Yorkers age 62 and older to help keep older New Yorkers safe in their homes. I've been in the mortgage business now for 30 years. 20 years ago, not many people knew about home equity conversion mortgages. They're referenced today as reverse mortgages. Fast forward to today from 20 years ago, and most people see commercials on TV. Most people hear about the home equity conversion mortgage through friends, through relatives. It is not a complicated loan program, but sometimes the information that's out there on the internet and through the media is not accurate. So what we're going to discuss today is the loan program, the process, and how safe this process is. The first thing a homeowner needs to do when they look into the home equity conversion mortgages is speak with a local mortgage originator. Not every bank or not every lender offers home equity conversion mortgages. So find a lender that specializes in these loan programs. And if you can be referred to a local bank or a lender, that would be wise as well. Once you speak with the mortgage loan originator, you're going to go over some basic questions. You're going to ask them questions, and they're going to ask you for some basic information. Some of the basic information that a mortgage loan originator at a bank or a credit union will ask you is, where's your property? What's the home address? What are the dates of birth of the borrowers? How much of a loan balance or a mortgage balance do you have on the property, if any? What is the annual real estate tax amount on the property? What is the annual homeowner's insurance premium on the property? If you happen to live in a condo, they'll also ask you, what is the monthly maintenance on the property? The lender, mortgage loan originator, will also ask you, what is your household income for the borrowers, either for an individual or for an individual and their spouse? Lenders should not, and most likely will not, ask you about your credit score or your credit initially, because guidelines for the home equity conversion mortgage do not, it's not that banks do not look at your credit. It's just that you qualify differently for a home equity conversion mortgage than you do for a traditional mortgage. So credit scores are not emphasized as much. But a lender will need to just look at your credit to get an idea of your payment history, to see if there's any collection accounts or if there's any judgments, just to get a good idea of the credit worthiness of the individuals that are applying for the loan. Always remember, you're in control when you speak with a lender or a credit union. There are no stupid questions. Ask all the questions that you and your spouse or your family has, and then you'll request some information basically from that lender so you can start looking at the specifics of the loan program. There are many safeguards that have been put into place regarding the home equity conversion mortgage, especially over the last 10 years. When the home equity conversion mortgage program was first offered in the 1980s during the Reagan administration, it was a different program than it is today. Some of the safeguards that have been put into place are basically that there are no costs upfront to speak. A lender should not ask you for an application fee. A lender should not ask you for any money upfront to speak with them regarding the loan program. So there will be no out-of-pocket expense to discuss the program with a lender or a mortgage loan originator. The initial contact between you, your family, and the lender is basically to ask questions and to get a quote from that lender regarding how much of a loan you will qualify for, how much the closing costs will be for that loan, what the interest rates are at the present time, and the choices that are available in the loan program. There are a few different choices available with a home equity conversion mortgage, and the lender and mortgage originator will go over those differences with you so you get a good idea of which program within the reverse mortgage program or which options you have would be best for you and your family. At any time, you can stop communicating with your mortgage loan originator and lender. And like I said, there would be no cost. These are just conversations that you're having with a lender and a mortgage loan originator to see if this program is right for you and your family, and to gather all the information so you can make an informed decision. The first mandatory requirement for a home equity conversion mortgage is to set up either a face-to-face meeting or a phone interview with a HUD-approved counselor. 20 years ago, there was no counseling. In my opinion, that's when a lot of issues were surrounding this loan program, because individuals might have made quick decisions. They might have taken the loan program with not understanding how it works. So counseling was first introduced, I think, about 10 years ago, 12 years ago, and it's a mandatory requirement. All of the clients that we've helped over the years have told us that the counseling is a very informative, educational experience. The main purpose and the reason why the federal government, which insures these loans, wants the counseling is so you as a homeowner and as a borrower can ask questions that you may not have felt comfortable asking the lender or the mortgage loan originator. These are independent third-party individuals. They are trained and available through HUD. They are counselors that have been trained, like I said, on the program, and they're going to observe the conversation. What I mean by that is they're going to make sure that all of the borrowers have full capacity. What I mean by full capacity is just they're not forgetful to a point where they may not know where they live, they may not know their name, or they may not understand the loan program. So the counseling call starts with the counselor just asking you some basic questions. Where do you live? What's your name? What's your date of birth? And then the counsel will explain the loan program. The lender that you're speaking with will share certain documents with that counseling agency, which will be estimates based on the estimated home value, the estimated closing costs, and the estimated benefit that you can receive as a homeowner and borrower. The counseling is there to allow the third party, the counseling is done so you can also have other individuals that can join you on the call. Now, the counselor will ask you who the other individuals are, and they will jot their names down. They could be family members. They could be a non-borrowing spouse, which just means if you have a spouse that does not own the property with you, they could be on the call. Your children are usually on the call if you want your children to ask questions or if you want your children to understand. We've had individuals over the years that have had friends, neighbors, trusted advisors. So you can basically have anyone you want on the call, but remember that the counselor will ask who those individuals are, what their names are, and what their relationship is to you. The counselor wants to make sure that no one, and I mean no one, even from a family member or a friend or a trusted advisor, is pressuring you or having you do this to maybe pay for services that they might be asking you to pay for. So remember, counseling is the first mandatory requirement to apply for a home equity conversion mortgage. And in my opinion, is one of the, it's the best feature of the process because you get to ask questions. You get to go over different aspects of the loan with the counselor. Now, the counselor will tell you to speak to the lender or the mortgage loan originator when it comes to rates and some specifics, but they do cover how the program works and how the program can benefit senior homeowners throughout the state of New York. Now, remember, you can do the counseling call or meet face-to-face if you prefer to do it face-to-face and decide not to move forward after that call or meeting takes place. You are under no obligation to move forward after the call, but once that call is completed and a certificate is issued with your name on it, you can now move forward with the lender of your choice and do the loan application. Once the counseling has been completed, a certificate will be issued with your name. They'll send you a copy. You'll give that copy to the lender that you choose to work with, and now you can apply for the mortgage. Remember, a loan application is simply you as a borrower or you and your spouse as a borrower just signing an application with a local lender to start the loan process. Remember, at any time during the loan process, if something changes, you change your mind, you decide to sell your house, or anything that might surface, you can stop the loan application. You would just contact the local lender that you're working with and say, please withdraw my loan application. They may ask you for an email, or they may just want you to tell them on the phone, but you can withdraw your loan application at any time. Once the loan application is received by the lending institution, the loan is submitted. Most of it's done electronically today, but don't fret or don't worry if you're not computer savvy or if you don't have email. Many lenders will send you the documents via FedEx, or you can visit the loan officer or visit the lender. But there are electronic distributions of the paperwork as well as wet signatures. So once the application is received by the lender, it's submitted to their underwriting department, and now the home appraisal will be set. To qualify for a home equity conversion mortgage, you have to have your home appraised. The reason why the home must be appraised is because the lender needs to set the value. So an independent FHA appraisal in your area is chosen to give you a call, set up the date and the time around your schedule, and they will do an interior and exterior appraisal. During COVID-19, over the past 18 months, 16 months, FHA and HUD allowed exterior only appraisals because they didn't want appraisers to go into people's homes. However, we're now at a point where they've changed those guidelines. So a full appraisal, which is an interior and exterior appraisal, is needed. So you'll get a phone call from the appraiser. They'll set up a date and the time, and they'll just come to your home. They'll walk through the property. They'll take a few photos. They'll take an exterior photo of the home. And then they'll go back to their office and they'll put together their report. They'll look at comparable home sales in your neighborhood. They'll stay in the same school district. They'll stay with the same style homes. They'll also notify the lender if they saw or observed any health or safety concerns. Some of the safety and health concerns that I've seen over my career is missing railings on staircases. Most town and city ordinances in New York demand railings on stairs. If there's one step, maybe from one part of the home to the other, you may not need a railing. But in most cities and towns, if you have 2 steps or more, you need a hand railing. The reason why banks and the guidelines state that the appraiser has to look at safety and health concerns is because the lender, as well as the federal government, wants to make sure that the borrowers are not hurt in their own home. Besides railings, we've seen broken windows. We've seen some electrical outlets that may need covers. There have been some issues sometimes in bathrooms and kitchens regarding flooring, meaning if open flooring. If anything's a health concern or a safety concern, most likely it'll be put into the appraisal report. Now, as a borrower, you're going to get a few options. If the bank you work with or the credit union you work with feels that the repairs are not health or safety concern, meaning it's not going to affect you immediately, you'll be given the opportunity to fix those issues after you close the loan. Because some borrowers tell us that they need the money from the loan to fix the property. However, if an underwriter or if an FHA guideline states that that specific repair or a specific repair is needed prior to closing, you would have to address that repair and fix that repair before you can close the loan. Now, that's if it's a very serious issue that can hurt you or something that can maybe escalate an injury in the household. Once we get the appraisal back, or once a lender gets the appraisal back, that's most likely when the loan will be submitted for approval. So you've done the counseling, you've done the application, you've done the appraisal. The lender then takes all of that information, submits it to their underwriting department. The underwriters look it over, and that's usually when the underwriter issues an approval. That's when the lender will reach out to you and your family and say that your loan has been approved. And at that time, you may need to submit some additional information. There may have been an unclear document. Something may have surfaced during the appraisal, or something might have surfaced during the processing that the underwriters had questions on. Now, you've provided most of the information up front with the loan application. You have been asked to submit photo ID, proof of insurance, proof of taxes, any mortgage statements on any liens on the property, as well as income docs. But you may be asked, once the approval is issued, to submit some additional documents. Once those documents are received, and if there are no documents on the approval, most likely your loan should be set to close quickly. Now, New York State has a guideline that says once the approval is issued, we have to wait 3 days, and you have to wait 3 days. It's called a cooling off period. It's a good period where you now understand the loan's approved, you're going to receive the proceeds. We've gotten the appraisal, so we know the value, so the numbers are set now. So you'll get a few business days to review everything and decide if you want to close. Remember, you could still cancel at this point. We've had a few individuals over the years that things changed during the loan processing. We had actually a family that had a scratch off, and they won lotto. They won a substantial amount on a lottery scratch off. That can change your financial situation. So you can cancel at any point. Once the 3 days passes in New York State and the loan receives clearance, you can now set your closing date. The amount that you receive once the loan is approved would now be set. And what determines that, now there were estimates given up front when you did the counseling, but that was either your estimate or our estimate of the market value. We did receive the age of the borrowers. We know the present interest rates in the marketplace. So once that appraised value came in and was set, now the numbers will fall into place. What I mean by that is we'll know the property value, we'll know how much of equity is accessible through a home equity conversion mortgage. We'll now fine tune the closing costs. There are some costs that may not have been needed to close your loan because we do have to disclose all fees that could be charged. So we'll fine tune, or a bank or a lender will fine tune the closing costs. And then final numbers will be given to you and your family. So you can see those final numbers, and then you can look at setting a closing date to set up the date where the closing will take place. Most lenders will allow you to close in your own property. If you're using a power of attorney, your agent would need to be available. If your agent is in a different city or a different town or a different state, our bank offers notary services all around the country. Most lenders do. So that agent, through the power of attorney, would need to be available on the same date as well. If you have a trust, there are trustees involved. Those trustees can be in other states or not local. And the banks will organize the signing of the documents by the trustees as well as the borrowers. I've always used the term aging in place safely because from my experience, most homeowners that look into the home equity conversion mortgage want to stay in their home. I've spoken to hundreds, if not over 1,000 families during my career. And most families that reach out to a lender or a credit union for a home equity conversion mortgage have an immediate need and sometimes also a long-term need. What I mean by that is home healthcare costs, home improvements. Those are two of the main reasons why a lot of homeowners in New York reach out to lenders to discuss this program, to fix some, the property may be in disrepair, it may need some immediate repairs. One of the spouses may be coming out of a rehab center or now needs a companion or a nurse for a few hours a day. And the equity in the home is available to help pay for these services. Once COVID-19 hit, I saw a change in a lot of homeowners' attitude towards staying in their home. It's been amplified. The care facilities in New York are adequate, are staffed to take care of us as we age. But COVID-19 changed a lot, in my opinion, where homeowners are now just looking at staying in their home, maybe having their children sell their home and move in with them, do an extension, do a dormer, downsize. Many different things have changed, with COVID-19 regarding staying in your home and aging in place safely. Just to go over the aging in place safely, I said the appraiser will notify the lender if there's any safety or health concerns. Any required repairs, as I stated previously, can be fixed prior to closing or within 1 year after closing. Home repairs and home healthcare costs are the 1 and 2 main reasons in New York why homeowners look at these loan programs. Even after your counseling call is completed, if you have additional questions, you can reach out to your counselor and that counseling agency and ask them specific questions if you don't feel comfortable asking the lender, or if the lender gave you an answer that you're not comfortable with, or if a lender did not answer your question. So you'll always have access to the counseling agency and the counselor during the entire loan process. In New York, as well as most parts of the country, lenders cannot take loan application fees. They cannot take any money from you during the loan processing. Some lenders and credit unions will ask you to pay for the appraisal because that's a third-party vendor, meaning the appraiser is going to come to your house. They get paid for their services when they do the report. So the only out-of-pocket expense may be the cost of an appraisal. There should be no other upfront costs because, as I stated earlier, you do have the opportunity to stop the loan process at any time or cancel the loan altogether with a loan withdrawal. So the home equity conversion mortgage allows homeowners to age in place safely and access the money in their home to stay safe in their property and pay for the bills, pay for home health care, like I stated, pay for repairs. There's no limitations on what you can do with the money. I'm just stating what I've seen over the years, why most people look into these loan programs. To give an overview of basically what we've covered today, I want everyone to understand that there are safeguards with the home equity conversion mortgage to protect you and your family. We've gone over these safeguards today. At any time, you can cancel your loan application, walk away from the lender, and hopefully have no out-of-pocket expenses. Worst case, you might have had an out-of-pocket expense for an appraisal. The HUD counselors are HUD approved, which is a government agency. So these counselors are versed in the loan program. They're educated with the loan program, and they're to educate you with the loan program. The home has to be kept safe, not only during the home inspection, but that's also part of the contract that you'll see at closing, where the home has to stay in livable condition and it cannot fall into disrepair. So you'll also have the obligation to maintain the property. We're not saying you have to fix, certain things in the property. You just cannot let the house get into such disrepair that it becomes unlivable. You will receive monthly statements every month at the property regarding your home equity conversion mortgage. As I stated earlier, there are some features regarding the loan. There's a line of credit, there's a lump sum. Most of the families that chose the line of credit, it's important to see that monthly statement every month. You're going to see what's transpired in the loan over the past 30 days, the interest that's being charged, if you've drawn any more money, if you've made a payment, it'll reflect on that monthly statement. Once you close your loan, you still have access to the mortgage loan originator and the lender. I could speak for our bank. We get calls every day from clients we've helped years ago to clients we've helped recently with whatever questions they might have. So the relationship should not end once the loan closes, and you can still reach out to the lender or the credit union and ask questions regarding your monthly statements or whatever questions you have regarding the loan program. The home equity conversion mortgage is a joint life loan program. What that means is if the borrowers are a married couple, it's a joint life program. So if the husband passes away first, the loan is still available for the wife, for the spouse. And vice versa. If the wife were to pass away first, the loan is still available and in force for the husband. The only time the loan becomes due is upon sale. If the family decides to sell the property, which they can, there's no prepayment penalties, or once all of the borrowers are at rest and have passed, that's when the loan would become due. The home equity conversion mortgage has no required monthly mortgage payments. That does not mean that you're not being charged interest. The interest will be discussed with the lender and the mortgage loan originator. That is an annual interest rate that is being charged on the balance of the loan. Now, there are no prepayment penalties with a home equity conversion mortgage, but a lot of families that we've worked with and a lot of families in general do mail in payments. You can mail in any dollar amount from $1 to the full loan balance. So we have some families that pay the interest every month, so the loan balance does not increase. But we also have many families, and I've seen many families never make a mortgage payment. Sometimes the reason why a family reaches out to lenders in their neighborhood or in the state to look into a home equity conversion mortgage is because they need additional cash flow. They are on fixed income. They may have had an emergency that they had to take care of for a family member, or they may have used credit cards for a specific reason. And now there's a crunch, more or less, with the amount of income that's coming into the household and the amount of monthly expenses. So in that case, most of those families do not make a mortgage payment or a payments back to the home equity conversion servicer, because they're using the home equity conversion mortgage to pay their bills and to live comfortably in their home. So, and remember, there are no prepayment penalties. So some families do want to sell, maybe move out of state or downsize. You will just have to pay off the loan balance at the time of closing. To summarize, a home equity conversion mortgage is a loan program that helps a lot of our senior homeowners stay in their property, pay their bills, and enjoy their retirement and live safely in the communities that they want to stay in. A lot of families don't want to move because of family members, or they've been in the community for 30, 40, 50 years, and they don't feel comfortable leaving the community that they raised their children and they've, raised their family and they've lived in most of their life. So you can stay in the home that you want to, or the condo, whatever type of property you have. Involve family members in the decision process. You don't have to, but it's always good if you involve family members so they know at the least that you have a mortgage on the property. So if something unexpected if something happens to you, your children or family members will know that you had a mortgage on the property. The home equity conversion mortgage simply gives you equity in your property to spend now. It's a loan. That's all a home equity conversion mortgage is. It's a loan on your property, which allows you to convert equity into cash to pay for your lifestyle, your retirement, and your monthly bills. A lot of families have told us after the closing that it was an easy process, that they felt comfortable doing it. And remember, if you don't feel comfortable at any time, you can cancel or withdraw your loan. So to summarize one more time, a home equity conversion mortgage is a loan program that's offered to senior homeowners in the state of New York, age 62 and older. If you'd like to contact us for any information, just follow the links below. And once again, my name was Frank Melia, Vice President of Lending at a New York-based lender, Quantic Bank. And I hope everyone has a safe afternoon. And thank you for your time.